Hey, as always, I hope everyone's having a good day, and let's get right into this breakdown. So, unfortunately, I'm actually still on a Zoom call with some friends, so I like to show you guys the process of me getting into the trade, me doing all that. So, unfortunately, in this case, I was not able to do that, but here I am. I'm going to show you guys the TP getting hit, and this is going to be a very light trade in terms of risk reward. It is a 1 to 3.26, and a lot of people with the specific style that I adopted, the way I trade, a lot of people are used to seeing crazy risk to rewards, crazy crazy things like that, and you will see that from me. In this channel, you've seen me hit a 1 to 5. It isn't too crazy. In the future, you're going to see me hit a 1 to 10. I'm just working on documenting everything. But at the end of the day, my trading plan explicitly states you can catch a let me drag this down here. My trading plan states that you can catch a Hey, this is Future Omar, and really quickly, this is the account that I'm using. It's just a prop firm that one of my friends mentioned to me, so I'm just testing them out just in case anyone's wondering why it says demo. I'm not a demo trader, just so everyone's aware. And thank you, and right back to the video. 1, 2, 3 minimum. So it's gonna be very rare that you guys actually see me catch a I'm sorry, I'm giggly, sorry. It's gonna be very rare that you guys see me catch a 1 to 3, but if the stars align and everything is the way that I would like to see it, then chances are you will see me. That's so weird. Sorry, it doesn't want to show me the ask line. I wanted to see the spread and everything, but yeah, like I was saying, down the line you guys will see me hit crazy risk rewards, like a 1 to 10 if you guys consider that crazy, 1 to 5 if someone considers that crazy, 1 to 7, and down the line I honestly think you guys are gonna see me hit very crazy, and not think, I know you guys are gonna see me hit very crazy risk rewards. And this is the stuff that I like to do. So right now it is going to be rare that you see me hit a 1 to 3, and I do recommend, by the way, that everyone writes out their trading plan. So I have a Word document that's titled Omar's 2022 trading plan, and it covers all of my rules, like don't trade on this day, catch a 1 to 3 minimum. If you're managing your trades, do it this way. If you wake up and you're not feeling the best, don't trade, and just stuff like that. If you guys want an outline of a trading plan, just let me know and I can drop mine and give it to you guys personally. But all this stuff is subjective, and I also recommend journaling your trades and doing stuff like that. But let's get right over here. So I do like how it just went ahead and broke this level up here. So this is actually going to be the point by which I actually take my partial. So as you can see here, I have a partial line drawn, and it's titled 95% partial. So if you guys don't know, I've been programming computers, working with them since I was 13 years old, and I programmed something called KOD Trade Manager. Now this is just a risk management calculator and a lot size calculator. You just put in your stop loss, how much you're willing to risk, hit buy or sell, and within a second it's going to go ahead and place the entry with the correct parameters, correct stop loss, correct lot size, all of that. And what I also have it do is that you guys can make partial lines. You can actually use hotkeys to enable stuff like this, and you can even drag the partial line around. I'm not going to drag it in this instance just because it's really precise where I have it, but stuff like that. So reason I made this is for myself, and then people started asking me about it, so I put it up on my website. So it's going to be Olympus, OLYMPUS hyphen or dash enterprises enterprises.com, and that's where you're going to be able to find all this stuff. But I've been in this position for I thought I was in here longer, honestly. An hour and 28 minutes. So while I'm in positions, a lot of the time, KOD just manages my positions for me, and this is why I made such a thing, because it makes it a lot easier on myself, especially because I can, like right now I'm on a Zoom call on my second monitor to the left. I can just do stuff on the side and not have to worry about my position, since the way that a lot of us trade is pretty rule based. Like if price breaks this level, you should probably get out of your position just because we had a double break going on. If price hits this level, the TP level, go ahead and shave off partials. And you guys will notice that the partial is 95%, and this is more aggressive than usual, since I'm going to leave a 5% runner. I'm not sure when this video is going to come out, but tomorrow's NFP. So this means that there's going to be a lot of volatility, so the runner I'm going to be leaving is about 5%. It's not the greatest, but in terms of how my week was going, especially because I took some -1s earlier, so just me taking this partial already brings up my account completely, and we're gonna end the week with a good tone, and that's stuff like that matters. So normally in terms of partials, you guys would see me do maybe 25, 50, 75%, but I just wanted to explain why the 95% on this specific partial is so aggressive. But yeah, once again, the risk reward on this trade does suck. Like you're really gonna see me go for 1 to 3. But once again, the stars aligned. I saw a good setup. I had the zone drawn down here, but I had we noticed something go on over here. I'm gonna be able to break down this entire position. Actually, I just want to show you guys KOD actually managing the position, chopping down the lot size, and then I'm also gonna put up a screenshot of the alert that KOD sends my phone, since I have it actually text your MetaTrader on your phone. So stuff like that, and the setup is pretty simple. And with KOD, I'm actually going to be using the bid price, so it accounts for spread, so it doesn't necessarily need to hit the line. Just within spread range, it's going to go ahead and knock me out of 95% of my position. And this is just like a little account build I'm working on right now. And yeah, it wants to hit my partial line, but it's not sure. I might even have to cut the recording or pause it and then play it again in a second. But right now it's just gonna be dancing. I suppose I can just go over my entry. So I'm gonna go to H1. So this price action isn't the cleanest, just due to the data feed that I'm using. But notice how we can probably go to maybe even Oanda might get the job done. Honestly, that does not look the best, so we're just gonna go back over here. So we had a H1 demand level, also known as the order block. Once again, you guys will hear me referring to order blocks, supply, demand. They're pretty much the same concepts. The way I see it, order blocks are just quote unquote more precise levels. So at the end of the day, just realize that when we're trading order blocks, they're literally just supply and demand at the core. So the reasoning as to why the risk to reward on this trade specifically also isn't too high is that we like to target the past high. So target 1 is going to be this level, we're going to partial out. Target 2 is going to be on this level, and if NFP does give us that potential run, then honestly the TP is going to be a lot higher and the trade's just going to be running. So the high is what we're going to be targeting. You go down to lower time frames like the M5. Notice how price broke above, and we broke the structural level. Clean break, price went right above, came back down, retested the breaker block over here. I wasn't looking to get involved at the time, so I obviously didn't get in on that trade. And then we broke it down, went to the M1 time frame, and we notice how structure is being maintained. You have the higher highs, higher lows, higher high, higher low. And when this specific higher low formed, it actually hit this demand / order block level. You'd be able to get a good you'd be able to refine this zone as such. Now the entry was a little bit later, since I wasn't as fast as I would have liked to be, but the concept still remains the same. So we had price run into this demand level, and I decided we're gonna have to get more information. You're gonna need more data. So hit the demand level, price rejected off of it. We noticed that it broke this previous high, marking that there's a chance that price is gonna go. and we had this nice little order block, flew above it, came down, rejected off of it, price went up, in turn left behind another order block right over here, and as price proceeded to break this high, my entry was actually, I believe, down here, because after it hit the order block, I started looking to get involved. And then you got to keep in mind we're on the second time frame, so this is a 5-point difference. So it's very possible that there could have been that that little bit of spread going on, but it was based on this. We can go ahead and draw this out for those that like to see it. 15S OB. In this case, it would actually be called a PB, just standing for like ICT propulsion block, since a propulsion block is a order block within an order block. And I'm going to give it a nice little rocket. Okay, and price is about to hit. Boom. We just partialed out of our position that easily, and now I'm going to go ahead and take a screenshot on my phone so I can send you guys what this stuff looks like. I hope the trade breakdown made sense. Sorry, like I mentioned, I am on Zoom on my other monitor, and then my third monitor is just up there chilling. So I'm going to go ahead and screenshot, show you guys what this looks like. And then, yeah, I hope the trade breakdown made sense. I may actually pop in tomorrow and just give you guys like a better breakdown, since I'm a bit rushed. But hope it made sense. Thank you guys for your time, and peace out. Hey, welcome back. This is going to be the second clip, and I actually have more time to go ahead and break down this trade for you guys and my thought process throughout it. So let's go ahead and actually show you the time. So it's 2:21 p.m. Thursday, June 2nd, 2022. Tomorrow is NFP. You guys heard me mention that in the prior clip. So due to that, I like to take off a large percent of my positions leading up to NFP. Now, I also did so to mitigate my prior losses that I had on gold. I had one break even, one loss, and even EU actually had a loss on. But this is the key to the risk to reward, because at the end of the day, everything that I lost was already made back. So yeah, we're going to keep in mind NFP. This is very big news, and during NFP, what a lot of people would realize is that, sorry about that, you just get a lot of liquidity spikes before price actually goes in the intended direction, so on and so forth. So if price wanted to go down, it's going to proceed to make its way up, go down, and then do so. So this way it can grab a lot of liquidity that we may have on either side of the market. Notice how it peaked right through this area and peaked right over here, and so on and so forth. So during NFP, I don't like to be in positions right when NFP is happening, maybe after the fact, or if I'm in a good position beforehand and my stop loss is where it needs to be and I feel secure in the position, then we'll go ahead and hold it. But otherwise, I like to take my risk off the table. And yeah, let's get right into this. So notice how we actually had an order block on the daily. Let's go ahead and change this to sorry. So why am I telling you guys this? Well, everything will make sense in a second. So by the time I saw this daily order block, price was somewhere over here. Notice how we had the imbalance over here that needs to be filled, and then price came up and ran right through the daily order block. Now, a lot of people at this point would have just deleted the zones, but you have to understand that there's something called an ICT breaker block. Well, what is a breaker block? A breaker block is an order block, say this is a bearish order block, that was disrespected, but still has liquidity in it. So just because one of your zones doesn't get respected doesn't mean that you necessarily need to remove it. Now, I don't keep 100% of my zones on the chart, because you don't want to have every single area you see marked up, but some of the more prominent ones, if the time frame is good enough, such as the daily, so on and so forth, there's a lot of imbalance, there's a lot of factors for price to come back down here, then I will keep that zone on here. So we did keep that in mind. Price came back down, grabbed the liquidity from this area, and we go ahead and delete that. Notice how the daily also peaked above the structural level right over here. So it's safe to say the daily actually broke this area, broke the past high. Go out H12, same thing is very present over here, broke this level, break it down to H4, I have a demand level over here. It's a demand level because this would have been my order block, but notice how the wick in this case actually traded through the order block, thus meaning there's no liquidity in it and nullifying the order block as a whole. Now what this did was just cause me to refine my zone to this H4 renewed / renovated demand. That's what I like to call it, and that's where we're at. This level didn't get hit, but this is a pretty good level, so I do keep that on here, but I don't mark off 100% of everything I see, just because, you know, certain zones, you know, have a purpose, and then other zones are just going to cloud up your chart. So on the H1 time frame, we did also notice that for one, and I believe I covered this concept really well when I was covering ICT propulsion blocks, order block, right? Price created an order block within an order block, making this a propulsion block, and then proceeded to make another order block within the order block within the order block, thus making propulsion block, propulsion block. So this was a propulsion block, and notice how price barely went through it. This is called absorption, and you guys have seen me do this before. Notice how if I were to get in trade, my stop loss would not be right beneath the zone. Now a lot of people teach this, but you have to understand, no matter who you are in the market, you can still get hunted. There can still be liquidity grabs, no matter if you're a quote-unquote market maker, no matter what you are. You can still barely get stopped out. So I tend to give my zones room, but that's what you see happen over here. After seeing this, I broke down to the I believe the 5 minute, and there's actually a funny story. Not really funny, it's funny at my expense, but this data feed Black Bull correlates with the broker that I'm using. So they actually froze for whatever reason for about an hour or two. So while I was marking up my other pairs, I would come back to NAS100, and you know, I thought it was strange that the market wasn't moving. So I'm on Zooms a lot with a lot of my friends, and they were saying certain things like, yeah, the market's down here, and then I just rub it off and just say, you know, no, it's not, my market's right over here. And then it took me a second to realize that for whatever reason the data feed actually stopped and then caused this gap. This isn't a real market gap. For whatever reason, once again, the data feed just decided to stop. So unfortunately I wasn't able to get involved in this move earlier. I do have people that were in from down here, and another person that was in from not my entry, but somewhere right down there. But you know, it happens, and it is what it is. So I'm going to move to Owanda and show you guys what happened when price got into this zone. We're going to break it down to a 5-second chart, and notice how you actually have an accumulation schematic going on here. Stalls climax. Oh, that's wrong. STMB, so automatic rally, secondary test, sign of strength, STB, spring. Price came back down, tested it, gave you a second entry, and then price proceeded to go up. And once again, I was not in the trade when this happened. I was still struggling with my broker. My entry was late. Wasn't the best risk to reward, but you know, it's still valid. So seeing all of that and seeing how the structure is constantly being broken, notice how this high got liquidated right over here. Copy you. This high got liquidated as well, and after this high got liquidated, I actually started looking for potential buys from down here. But we also noticed that there was another demand level right up here. Now this is an order block, but notice how we can actually refine it down to just this wick and just call it a demand level. So that's what I did, and if you understand PD arrays, premium discount arrays, this is actually right at the 50%. So at the time, or actually still right now, this seemed like the more probable trade as opposed to waiting for price to get down here. And if you wanted to get really into detail, you can notice that there's also a potential breaker block right over here. This order block was actually traded into a little bit, but let me try to show you guys this. Yeah, there could be a potential breaker block that was going on here. Order block was traded through a little bit, price went down, potentially still has some liquidity in it, came back to test it. So all these factors, me understanding that there's a potential breaker block, we're at equilibrium, there's already a demand level, and understanding the fundamental side of it. You also have to understand that the numbers today for ADP non-farm employment change were very bearish for the dollar. Now, if you guys understand risk on versus risk off, you can see that dollar going down oftentimes leads to other markets going up. Now, the dollar going down is characterized as a risk on market. What this means is that investors are buying up quote unquote riskier assets. Sometimes crypto applies to this, but you'd see stocks, bonds, equities, so on and so forth being bought up in a risk on market. Now, when this happens, the dollar normally goes down. How do I know this and how can I prove it? We can go to the dollar right now and notice that, let's go on a higher time frame, the dollar is going down while NAS100 is going up. Now, why does any of this stuff matter? It matters because I understood that, you know, there's a very, very bullish precedence in the market. So yes, I could have waited for it to get down to this zone, but you have to understand that there are more zones than just the ones at the very bottom, because this is how you see a lot of people draw it, and myself included. Price would go up and would just, you know, very simply expect price to come right into this zone, grab the liquidity, do whatever it wants to do in here, and then proceed to go up. Yes, but you know, it's very possible that price does not always make it down here. And in my first video, I actually mentioned that there's maybe a 60 or 70% chance that price can get all the way down here. And with the market climate right now, honestly, I think it's actually lower than that. So point just being that price doesn't always come down to your lowest zone. So just keep all that stuff in mind. So if we go on the 30-second, you can even switch up your zone just because this high was taken out. And yeah, so that's where we're at. Let me go ahead and pause this really quickly. Alright, I'm back. Sorry about the pause. I was actually on Zoom and you know, I was called, so I believe I was covering what it looked like down here. I was saying you can still you could have made this zone valid just because this high was taken out. Right over there we had the potential breaker block that happened, and I do have this white zone highlighted over here. So once we got into here, right, what you can do is go ahead and break it down. And once again, the market is fractal, so just let's all keep that in mind here. So we're going to be on the 1 second chart, so each candlestick, you know, represents 1 second. And what do we see here? We're going to notice that there's actually a accumulation schematic going on here. So we had our PS over here, still as climax, AR, ST, center strength, and we also had a secondary center strength, ST and B. Notice how it peaked right below it. We had a spring, then came up to test it, tested again, tested one more time, and then that's where we got our 15-second propulsion block from. Move up to 15-second. And price hit it and spread quoted me right up here. Yeah, so in terms of trade management, I was able to move my stop loss to break even fairly quickly. I believe when price was up around this point, after all the consistent breaks of structure that we were getting. Notice how this high got broken, this high got broken. You go down to 15-second, you'll even notice that, you know, it looks a lot clearer. All these highs are getting broken. Now, a lot of people are going to wonder, so let's go ahead and cover it now, why these lines are here. First, price broke this high, proceeded to break this low, and then I drew this line because I drew this line when price was actually right when it closed below the prior line, because if price were to close below this line, the structural level, after new highs were made and confirming double break, then chances are I may be in some, you know, like, how can I explain this? More like there's a very high likelihood that price can actually just come and hit me out because structure just broke twice. Either it's gonna go and grab the liquidity from this area here, or price is just gonna come down and validate my trade, hit me out of break even, and I'll just take a break even on this trade. But instead, it came, and we like to wait for the candles to close. And notice how it completely reversed. So at that point, I was just, you know, realizing that, you know, market's still valid. Waiting, boom. KOD took partials up here, and we're all set. Right now, how's the position doing? It's coming back down. I think it's right around my TP level. Yep, right over here. Second TP up here was never hit. Actually broke structure. And yeah, that's where we're at right now. Hope this made sense. And in the future, just be on the lookout. We'll be catching crazy RRs. We'll be doing trade breakdowns. Please leave feedback in the comments or DM me on Instagram. All my links are going to be in the description. And yeah, that's everything. If you guys have any questions, this is the end of the video. So if you guys have any questions, feel free to ask them. I'll respond as soon as I can. And yeah, I hope this trade breakdown made sense. Let me know if you guys want more videos like this, less videos like this. And that's it. Peace out.